Welcome to This Week in Venture Capital. I'm very excited this week. We have two phenomenal guests. The first is actually in our studio. It's Paul Jozefak with, and I never can pronounce this, Neuhaus Partners.
Perfect.
Was that good?
Perfect.
Formerly ran Europe for SAP Ventures, and we're going to come to that in a moment. He's joining us straight from a flight, just arrived from Germany, straight here to the studio, so thank you for doing that. If we catch him nodding off, we'll know why. And good friend, Om Malik, dialing in. Are you in San Francisco or Palo Alto today?
Oh, I'm in San Francisco.
You're in San Francisco. So thank you very much, Om, for appearing on the show. We're delighted to have you.
My pleasure. Thank you for having me.
Great. So as you know, the format of the show, we like to talk a little bit about our guests. We like to talk a little bit about the industry overall, and then we go through a few of the deals. Om, I'm going to start with you. Just for people who don't know your background, I'm sure everybody knows your background, but you were a longtime journalist. If I'm not mistaken, you did a period of time at Forbes, at Red Herring in its heyday, when Red Herring was the magazine everybody had to read, a period of time at Business 2.0, and then you actually decided to set up your own media empire with your GigaOm website and series of websites. Have I got that about right?
Yes, you did. You did a great job, Mark.
Luckily, there's Wikipedia, but actually, I knew all of it except for Forbes.
Okay, well, you know.
I knew all of it except for Forbes. And GigaOm itself was funded by True Ventures, with whom you have a close relationship.
I do. So,
okay. Are you there?
I am. I actually just lost the audio for a second there.
Oh, really sorry. Yeah, I was just teeing you up on True Ventures. As you know, I've said it both to you privately, but I say it publicly all the time. When I think about my favorite venture capital firms for early stage investing in NorCal, True is always on my short list. When I was setting up my second company, and I had several term sheets, of which I'd say many of them were kind of sharp elbow term sheets, True Ventures was the one really clean term sheet I received. And everybody that I talked to who had taken money from True Ventures, and frankly, everybody since, says that they are some of the most honorable, helpful people that they've worked with. Does that sound right to you?
Yeah, absolutely. It is my favorite firm as well, considering, you know, they funded my company, and when the time was right, they invited me to be a venture partner at the firm, which was about 15 months ago or so. And so I've been with the firm actually more than 15 months. It's close to 18 months now. We try and do, I mean, I don't mean like we try. We are always in the founder's corner. That's how the true folks like to think, right? And that's one of the reasons they brought me, Tony Schneider, and Tony Conrad into the fold, to bring the founder's perspective and keeping us focused on, you know, always being friendly to the entrepreneurs, making sure the terms are in entrepreneurs' favor, doing little things which come from from the experience of running a company. And, you know, our founders have also, you know, started and run companies. So John Callahan started Chemdex, which was a big B2B company back in Web 1.0 days, and the other GPs are Phil Black and John Burke. And what we basically, you know, we do is we always kind of say is like, how can we actually make entrepreneurs' life easier? And how can we make it better so that they can do the job which is mission impossible, which is building a startup? You know, there is a lot of external pressures already to begin with on a startup. So if you try and do too many, you know, other things, you only cause more anxiety to an entrepreneur. You always have to remember, you want your entrepreneurs to win. So in order for them to win, you always have to give them the tools and the opportunities and freedom to succeed. And I think those are the things when we run a company, we look for in our team members, right? We give them space, we let them be creative. I think it's exactly the same thing. It just is a two-way collaborative effort where we have to always think of the entrepreneur first. How do we make their life better?
And True Ventures formed their first fund in about 2005. Does that sound right?
Yeah, that's right. And I was the first investment they ever made. So amongst the other companies they've invested in is Automatic. Stock Twitch is another one.
And sorry, I just want to stop you for a second just to be sure everybody knows. Automatic is the holding company of the company WordPress.
Yes.
Which
WordPress.com.
Which I'm assuming is probably by now the most used blog on the world, is it? Blog platform?
Yeah, more than 10 million people use WordPress.com, and WordPress, the open source software has been downloaded I don't know how many million times. So that's one of the bigger companies. We have Socialcast is another one. We have Stock Twitch, Milo. We have close to about 60 companies that True has funded, mostly seed stage, very early seed stage, and for Series A funded.
So, and I want to pivot a little bit to hear a little bit about the company that you founded, GigaOm. How has that? Where do you think it's currently positioned relative to whoever you perceive as your competitors? What new shape is the company taking?
So, for about almost a year or so, I have taken a backseat from the active management. I've become the chairman of the company. As you guys very well remember, that about almost 2.5 years ago, I had a medical condition which almost knocked me out. So since then, we've basically taken steps to transition the company into a more professional management structure. So we have, so I'm the chairman. We have a CEO, Paul Jozefak. He runs the company. And the way we position it is like, we are trying, so I have a belief that thanks to things like Twitter and Facebook, you are looking at a world where the news advantage is only going to decrease because the world is moving much faster. So as there is more and more information out there, you're going to look for sources which provide context, analysis, give you a sense of what's going on, not just with an opinion, with some attitude, all those things which make blogs fun to read. And that's what we are trying to do. We are taking a little bit, we take one step forward than just news. So if you come to our site, you come to GigaOm and our network of sites to understand what is going on, right? Like what does this news mean?
Would you describe it? I don't want to put words in your mouth, Om, but would you describe it as maybe more in-depth analysis than TechCrunch, maybe slightly more vertically focused around a few key topics and less obsessed with the breaking funding stories, breaking news? Is that roughly the positioning?
I would say, I think we coexist very nicely. So they do news really well, and we do analysis and opinion really well. So those are our skill sets. Yes, we do break stories. We do compete with them aggressively on news. But yes, we do take a little bit of a longer approach. And so that is why people, when they say you guys are in competition, and I said maybe it's more like cooperation in a sense. What they do and what we do are kind of complementary. The other thing which we do is very different is that we don't obsess solely about web startups. We write about pure technology companies. We write about clean tech. We take very deep, in-depth look at online video. We look at, workplace trends. So we look at the whole gamut of issues, and we keep looking for new areas to write about, which sometimes tend to be boring to non-web readers, right? So we kind of go in those directions. So, bioinfo sciences is something I'm really excited about personally. I'm very excited about game theory, so I write about that. I'm like a big, proponent of user experience and user experience for building products. So I really think about those things. I think about, and when I say I think about those things, that's what really my job is at the company, is to come up with these ideas, put a framework, and hand it over to my team, and then they run with it.
Are you much happier now that you're, first of all, I want to say we're all very happy that your health is doing well and that you've recovered from 2.5 years ago. Scary for all of us. I want to ask you, are you having more fun now that you can sit down and go through this creative process and write, as opposed to have to manage the entity day to day?
Absolutely. And, I still haven't come to full strength in terms of writing on a day-to-day basis. I want to write more, except I'm under strict orders by the doctor to not work longer hours. But, I can't ignore those.
Gotcha.
But I want to do more writing for sure.
Great. What I'm going to do is I'm going to bring you back in a second, because we're going to do a deep dive on some of the topics, because I know you have a depth of knowledge that I think will be interesting to discussion. I want to do two things. First, I want to introduce one of our sponsors. We have two sponsors for the show. The first, I think most of the viewers will be quite familiar with, which is LegalZoom, LegalZoom.com. It's not a law firm, but it was created by top attorneys to provide self-help services at your specific direction. What I can tell you about LegalZoom is I'm actually a user. First of all, in my personal life, I'm fortunate enough to own some property where I've been able to do things like lease agreements on LegalZoom, which is great. But they also have a lot of business documents. So it doesn't replace the need for lawyers, but there's some simple documentation, whether it's just doing your simple company registration, some basic trademark work, patent filings, contract review, basic stuff like that. For the most basic documents, I think it's phenomenal, and potentially even start you off with a base camp of documents from which you could ask for a lawyer's advice. I think obviously as you get into more complicated stuff, you're going to want to bring lawyers in, but I have found a lot of value in LegalZoom, and they've grown tremendously. So that's one of the sponsors of our show. I'm very happy for that. So thank you, LegalZoom. If you want to sponsor this show, send an email to mo@thisweekin.com. Paul, you have been working in venture capital for just under a decade?
Yeah, I'm about to hit 10 years.
You're about to hit 10 years. Yeah. And so that officially means you're on the dark side, like 10 years, like you're converted.
I should know what I'm doing by now.
Tell me about your days at SAP Ventures, because you were at SAP Ventures during the boom era.
Yeah, I caught the tail end of the SAP boom era. I also caught the beginning of the end for venture capital and the bubble.
Yeah.
So I kind of came in at the high point. And
what year did you start there?
2000.
Okay.
Late 99, 2000 timeframe.
Boy, if you could have just got there 3 years earlier.
Let me tell you. Let me tell you. They had a good run, too.
Yeah.
So SAP Ventures did quite well for SAP. And then I came on board, and we were a small team in Europe, so I'm talking more for the European side right now.
Yeah.
We were 2 guys, 1 assistant. That's basically the whole team. The guy who hired me bailed out 6 months after I joined, so I inherited, I think, 14 portfolio companies.
Right.
Basically right after everything went bust. So it was an interesting experience.
And how big was the fund? Was it a set size, or just?
It was more of an evergreen.
Okay,
at that time. I think they've evolved now to having a fairly set amount.
And I just want to be sure all the viewers understand evergreen. There's 2 types of funds. Fund 1 is a closed fund where you raise $100 million or $200 million. Usually has a period of time, 7 to 10 years. Usually it's 10 years. You invest for, call it 4 to 5 years. You harvest, which is you might do follow-on investing, sell some of the companies, IPO, shut down companies up until year 10, and then you're expected to return capital. An evergreen fund, and there are many, what they do is they don't have this kind of closed period. They don't have as much pressure to exit over a fixed period of time, and proceeds that are returned from the fund can be put back into the fund to continue investing, and that's where the term evergreen comes.
Yeah, and this was a little bit more of a hybrid of that as well, because it was off the balance sheet of SAP.
Okay.
And it was basically it was like a business unit, right?
Okay.
So in that regards, that it was a little bit different than an actual set structure.
Yeah.
It wasn't driven by financial return.
Okay.
Or it was, excuse me, it was driven by financial return as opposed to strategic.
What do you, I mean, having done that for 6 years, what advice would you have for entrepreneurs, not SAP specifically, I wouldn't do that to you, but as a broad category, let's include anyone who's a corporate venture arm these days. Good idea, bad idea, how do you get the most out of it? What pitfalls should you avoid?
One of the things, again, it's just like with any VC. It depends on who you're talking to. So depending on which corporate, without naming any names. And I'm not specifically talking about just about SAP, but I've worked with other corporate VCs as well, having been a corporate VC as well as afterwards.
Yeah.
One of the biggest pitfalls is probably setting your expectations too high as to what the corporate can deliver above and beyond the money. Okay. Right? Because a lot of people go in and think that if they're getting money from a corporate VC, that means that they're going to have immediate access to business units or to the sales force or getting on a price list. It just doesn't happen that quickly, or it just doesn't happen in a lot of cases.
Right.
That's probably one of the biggest things to be.
I mean, do you think that they oversell what they can deliver?
I think at times they did. I think it was worse in the 90s. I think now a lot of corporate VCs are being a lot more honest.
The risk? I mean, this I'll ask you your direct experience. Let's take SAP Ventures. If SAP Ventures backed something, didn't that make it harder for that company if it wanted to exit to Oracle, for example, the arch nemesis?
Yeah, it's kind of funny. We had that question practically on every deal, right? And I don't want to speak for them now, but when I was still there, that actually didn't turn out to be as much of a problem as we even thought ourselves it might potentially be.
Right.
I don't think we necessarily had that many companies that Oracle was chasing down during the time that I was there. But it didn't turn out to be as big a deal, because if the company was good enough on its own merits, either SAP or any other corporate would end up buying it if it was in the space.
What about the argument that corporate investors have ulterior motives because it's not purely driven by the profit motive? Sometimes I invest in your firm because I want to see some of the innovation that comes out of that. And a profit motive might say, let's cut costs, make a profit. A corporate investor might say, no, I don't want that. I want to see you ramp up because we want access to your technology. Do those conflicts ever come in?
The conflicts do come up because you're also, depending on who the corporate VC is reporting to within the corporate structure, you have to be very cautious. Who's kind of driving their decisions, right? If they're a completely separate entity, there's less of a risk of that corporate parent determining what they're doing. If they're sitting right within the actual corporate structure and sitting in their main office, you got to be a bit more careful.
And just to pivot to your new company, Neuhaus Partners, that's such a hard word for me to say. It's a 65 million euro fund based in Germany. When was that fund created?
So the current fund, we had a first close in 26, final close 27.
Okay.
And it's the third fund that my partners had raised with me. They had already had 1 and 2. Okay. Starting back in '97.
Okay. And your remit is to fund early stage, mostly technology firms in Germany plus Europe, but in broader Europe, it's in instances where it's German-speaking.
So we have a mandate to invest throughout Europe, but we focused on the German-speaking regions. We're tending to be more and more very early stage, so we're even doing some seed type investing.
So you're Austria, Switzerland,
Germany. Yeah, that's basically going to be 90-95% of what we do.
A tiny slice of maybe some other markets where the German.
Yeah, we had a company in Holland, for example, right? And it was right on the border.
Yeah.
So that's basically kind of the concept. We'd like to be close.
What's going on in European venture capital right now? I read the other day that European venture capital is down. Fundings are down 82%. Does that sound right?
Yeah, it sounds about right. It's definitely slowed.
Decimated.
Yeah. Well, it went from a peak of 2000 to now down to in Germany, right? We had, if I remember the number, it was 80 VCs at the peak, and now it's a handful.
Wow.
So it's really gone back, and now you're just seeing the talent, right? The 10-year fund cycle's ending.
So what are entrepreneurs doing? Are they turning to either angels, or they look into the U.S. to raise capital, or is it just less entrepreneurship?
It's almost impossible to raise money from the U.S., right? So especially if you're an early stage business, you're not. There's one-offs, right? Sequoia does something every now and again. A couple other VCs have dabbled. A couple of VCs have actual locations in London. Most of them, like Excel. But that's just an option that I would never actually recommend to anyone. Don't bother. They're actually moving more to the angel side, the super angel type of investor.
I guess you have Saul and is it Ron Klein?
Saul Klein and his dad dad. So Saul.
What's his father's name again?
Robin.
Robin.
Yeah.
Sorry. Robin Klein and Saul.
And
which
they're
I've
both
heard great things about them.
Great guys.
And they're now affiliated with Index Ventures, based out of Switzerland and the UK.
Yep.
And Index has announced they're going to be doing more angel investing.
Yeah, and
they must be killing it. Like if. They must just get all the best opportunities if the market's just dried up.
Yeah, I think Index is killing it in Europe. They've definitely positioned themselves very well. There's a couple of other players who are definitely positioned, but it's few and far between.
You have Balderton.
You have Balderton, you have
which
Excel.
Used to be Benchmark.
Exactly.
You have Excel.
You have Partech out of France.
Greylock, I think, out there.
I haven't seen them in the last couple of years. No, not much.
They hired a woman out of Jerusalem Venture Partners, who I think is covering the London office.
They might have an office.
Okay. So now I want to pivot. So thank you very much for that. And I want to drag you both into a discussion about the industry. I want to start, Om, if it's okay, with Apple. A lot of big announcements in Apple world. First of which is the release of OS 4. Secondly, the new iPhone that's coming out, which has met incredible demand. I want to ask you about the OS 4 announcement. One of the things that I'm hearing that's changing is Apple's more aggressive move into advertising. They've announced iAd. They bought Quattro, which obviously was a mobile ad company. And specifically what I'm told, that they're releasing on Tuesday of next week the new OS 4. And from their last upgrade cycle to OS 3, 70% of all users upgraded in a very short period of time. What I'm told on the new OS 4 is that it breaks any application right now that's using AdMob.
Uh-oh.
And it's breaking applications that are using other ad platforms. Are you hearing any of this, Om? What's going on with OS 4? What's going on with the new iPhone?
Well, I haven't really heard anything of that sort. I think a lot of it is just a little, I would say, speculation. I'm sure, because it's Apple and what they do with their own platform would be fairly unique with the advertising thing. But again, I have not seen it. Now, we have an application, the GigaOm app, which we released about 3 weeks ago, or 4 weeks ago roughly now. And we have AdMob, in there. And I have to be very honest with you, that is a horrendous advertising experience from a user perspective. And the kind of money you make is just like pennies, right? Literally, we are still making less than $100 for the first month. So there is a lot of room for improvement as far as AdMob is concerned. But I am not sure that I've heard anything on Apple breaking AdMob's, ads.
I can be the guy who confirms it here. I have direct knowledge that it's breaking. I have direct knowledge that it's breaking all the other platforms. It's breaking MobClicks. And other participants out there. It may be that it all gets resolved, but it does beg the question of these really big technology companies, and we know now it's Apple, it's Google, it's Facebook, it's becoming Twitter, just the enormous power they have, and when they make a change like this, there's a lot of collateral damage.
I mean, Mark, are you surprised that there is collateral damage?
Am I surprised? I'm not surprised by the collateral damage. I'm surprised that Apple hasn't made more of an effort to work directly with the community and trying to roll this out in a way that enables competition, a healthy amount of competition on the platform to at least catch up with their software changes. Maybe I shouldn't be surprised. I mean, I guess this happens with Google all the time. It has prompted an investigation. Let's see who's investigating it. The FTC, the Federal Trade Commission, is considering an investigation into Apple's anti-competitive practices.
Yeah, great move for investigating a company with 2.5% market share or something like that, right? Or less of the overall cell phone market. I mean, I don't quite get it. I get that there are some people who are upset. I'm pretty sure there's a lot of people who are upset that they have to recompile their apps and need to work with different ad formats or something of that sort. I I would say one thing to the FTC investigation. It's like, hey, focus your energies on the guys who destroyed the U.S. economy, not on the people on the West Coast who are actually creating value. There's a lot of other places they can focus their energies on. Goldman Sachs, I would say start there. There's a couple of other big banks they can go to, and that's where they should be spending their energies. Not looking at an Apple or a Google, two companies which are actually trying to do something interesting, trying to take U.S. into the leadership in the mobile industry. But if you remember, till 4 years ago, it was all European all the time, right? Like it was all Europe all the time in the mobile industry. So I'm a little bit, against this whole idea of investigation. As far as your points about, Apple, using sharp elbows, Paul, I mean, that's what happens when you have platforms, right? When you own a platform which makes a lot of money for a lot of people, somebody's gonna get poked in the ribs, right? And some people are. I mean, it's not like AdMob is an independent company anymore, right?
No, AdMob, just to be sure everybody knows, was acquired for more than $700 million by Google.
Right, and so it's a Google company. Why would, it's like saying, I mean, I use a pretty crude analogy. It's like, saying, you can come and live in my house, eat my food, that's okay. And when time is right, you can go away with, you can walk off with my girlfriend too. How does that make sense? Right, so and I think what Apple's doing is a good business decision.
If I'm honest, I actually don't agree with the analogy because, look, it's their platform. They've spent their money. They've built it. But if you build a platform that has too sharp of elbows, then what you get is a community wanting to form outside of that, and you create the own sense of competition. And imagine if Google has, kind of a dominant position in search, so it makes it harder. But imagine if Google just said, well, we decided we're not going to feature Apple in our search results anymore.
Here's the thing. Nobody is saying don't use AdMob. Apple is not saying don't use AdMob. They have changed certain policies around data collection, which you can't use, okay? Which is the only thing they have changed.
That's actually not correct. So there's two things out there. One is they did change the data collection, the allowances for data collection in direct response to Flurry, as you're aware, who was collecting data and then making that available to potentially to third parties. And Steve Jobs said directly that the thing that pissed him off about it was that the users weren't knowledgeable that the data was being collected and there wasn't consent there. But the other thing that they've changed is with the release of OS 4, the other ad platforms actually to date do not work. They don't work. They're breaking. I mean, I've seen it firsthand. So it's not only that they're changing the term of service to block out people like Flurry, it's actually going to break other applications.
I mean, if I comment on the way I see it, so Om actually made a good point that Apple and Google have basically taken, the nucleus of where mobile was happening from Europe back to the U.S.
Yeah.
And so hats off to them for that. I have to admit, I wasn't surprised, and I'm not surprised by the way Apple's behaving. I think you could basically see it happening over the past year, this evolution of how much control, I guess, they want to have over their platform. If you look at what the carrier was doing before.
Does that worry you as an investor?
I'm a bit concerned because we're also in a company called Abrupt, which is doing affiliate networks for applications.
Yeah.
And one of the first things when I saw iAd was basically start kind of worrying how long till Apple potentially blocks any access.
Yeah.
So yeah, there's a fear there. But again, it's.
But Om's point, I think one point for me is really well taken, which is we had a world in which 4 U.S. carriers controlled all access to the consumer. You had a hegemony. And we had the same in Europe. I lived in Europe when you had that. And what it meant was no innovation whatsoever. And what you have now, because Apple broke that hegemony and said, we're not going to have carrier software on the devices, and suddenly you have this proliferation of applications, which has been phenomenal, and Apple is responsible for that. So to take the positive side, we should be very happy with the moves that Steve Jobs has made. And maybe the positive byproduct for all of us is he's kicked Google in the ass to make sure that Google is doing something competitive. They've kicked Verizon in the ass to say, well, you're blocked out of the iPhone, and that's really playing into Verizon working closer with Google and the Droid Incredible and launching new applications. Verizon is rumored to be working hand in hand with Google on a tablet, I think Dell as well. And so maybe what we'll see as a byproduct of this control is a proliferation of competition that benefits us all. Is that a fair theory, Om?
Oh, absolutely. I think, if you don't like Apple, and there is a lot of people who don't care for Apple's business practices, they're going to Android, and more power to them. I'm actually a BlackBerry user. I mean, as long as they're on AT&T, I won't use the iPhone 4 or whatever. So for me, it is like, yeah, the more platforms there are, the better it is. I'm not so sure Apple actually has the idea of having 90% of the mobile smartphone market. I'm sure they'll be pretty happy with 20–25% of the world market, mostly because that makes them a lot of money. I mean, as a company, they make a lot of money, even with a small market share.
I only wonder out loud whether, and the analogy's been used and a lot of people refuted it, but whether Steve Jobs may be making the same mistake twice, which is building a closed platform where he controls all layers of the stack like the Mac did, when it was competing against the PC, and where we're seeing some element of that with the iPhone and I guess eventually the iPad as well. And might that create a healthy ecosystem of competition where the whole rest of the market wants to play more with Google, more with Microsoft as a result?
Okay. Even if it's true, Mark, let's say, even if that is the approach, and we don't know what he's thinking, right? Everybody's making speculations of what these guys are thinking. Even if that is true, remember, in the PC revolution, people who made money were few. Microsoft, Intel, Intuit, maybe Adobe. You can call the guys like Compaq made money for a little while, Dell made money for a little while, but it wasn't really that many people who made a lot of money. Apple as a business has consistently, whether you like their business practices or not, has tried to make money for its shareholders. And because of the fact that it can make money, it has been able to do interesting things with its technology. I am pretty sure that is a standard practice. They don't really think in terms of like 95% market share. They think in terms of 100% customer happiness. I think that's the difference in the approach of the one group of people and the Apple people. And I think that's fine. I think more competition is good. I would be happy to see Android. I've been hoping that there are more Android tablets, and I like the fact that RIM is doing some new tablets. I think I'm glad that Apple is getting people galvanized to do different things and not have the status quo which has existed for a very long time.
I think that's a great point. I'm probably going to cut Apple there because I want to get your views, Om and Paul, after that on Facebook. What do you see going on in the Facebook era? It seems like people are now willing to call Facebook potentially at some point being as powerful as Google. Is that happening? Do you see this shift? Are you a believer?
I am. I think Facebook is a very old-fashioned technology company. It has, it's building interesting products. It's taken on a big challenge. It's going after, it's shooting the big elephant. It's going after the white elephant. And they're succeeding. I think they are going to cause some problems as far as Google is concerned. Because I think as we have more and more information going on the web, what you will see is finding information is going to become more and more difficult. You see that Google is responding by updating its technologies. Last week they introduced caffeine to kind of get more faster results to people, and the results are, that's one aspect of doing, finding things. But you see a whole generation of people is growing up using Facebook and Twitter, so they have a very different user experience or user interaction with content. They all live in the activity stream. Their information comes from their friends or people they know on the web, and that is how they find and assimilate their information. And I think they're going to start taking attention away from the old way of doing things, which is Google, to their own way of doing things. Look, the reason Google became really successful was very simple. Google changed our behavior from looking into a directory structure and bookmarks into searching for everything. And for about 8 years, they've literally printed money because of that. Think about it this way. What Facebook is doing is changing the behavior again to a new way of finding information. So I think that is the single biggest challenge Google has in front of it. No, it's not the technology challenge. It is people's behavior has been...
So, I want to point out something that's interesting. So I agree with your assertion. It's changing user behavior. Instead of searching as much, we're spending more time reading the stream. You know what I found mind-boggling, Paul, is I was at an offsite for Graycroft Partners, which is a venture fund based out of New York and LA. And they brought in a number of digital media agencies, and they brought in even some brands. And what people were saying out loud, which shocked me, was they're abandoning the idea of having web pages for all their brands. They're saying there's some brands that deserve to have web pages, but for everything else, we want Facebook fan pages. And what they're saying is we want our budgets going into driving traffic to our Facebook fan page, and here's why. They're saying, look, okay, I don't know, I'll make it up. I've got an OptiFlow pen here, and if I have this website for this OptiFlow pen, people come there. First of all, I can't get people to come here, and if they do, they don't do anything. If I drive them into Facebook, I can engage the audience. I could put offers and deals, tell them about the new products. And those users themselves who happen to come to my fan page with information I'm pushing into their stream can like it, can share it, can comment it. And the engagement that they're drawing is driving a lot more benefit to them than their websites. So they're saying serious money is going into that. Does that surprise you?
No, not at all. I'm seeing that more and more just in terms of the behavior of people on Facebook. And if you really think about it, especially if you want to put your advertising dollars to work, you want to go where the people are, right? Yeah. And as you said, in the stream is where you could probably get the most visibility. I just see how much time I'm spending with Facebook, also with our own fan page, just for our fund, right? I actually don't spend much time on our homepage. I put all the new information on the fan page.
Right.
The majority of people who are interested are fans. They're actually opting in to get the information by liking you or becoming a fan. I think it's an optimal channel to reach your customers.
And you know more about the people who are actually there than you do on your website because you've got all the information about the people.
Exactly, and especially if you're linked up with them, you know who your crowd is. Right?
Yeah. But do you worry for a brand, again, if I take pens or soap or soda or whatever, do you worry that if they drive everyone to Facebook fan pages that they're not focused on building their own websites, their own brands, their own positioning, but putting more power into Facebook, or you don't worry about that?
It depends on what the product is, right? I mean, if you have a product that you need to really sell, right, like soap, right? I don't know how much you're going to be able to take from a homepage where you probably have advice on how to clean with that soap, and how much of that you want to do on the fan page, right? It just might be too much, and I don't think we can completely switch now from one to the other. I think it's too early for that.
Does this trend surprise you, or is it what you're hearing in the Silicon Valley?
It's pretty much consistent with what we've heard. So
it seems to me that's one of the reasons, if it's true, and it seems to be that that's a trend that really is going to drive Facebook into being a hugely valuable company. What I said in 2007 already was What Google knows is Google knows your intent. You can type in baby carriage or stroller or whatever we want to call it, and they know that you have intent to potentially buy that. But what they know about me on Facebook when I engage is they know I'm 42, they know I have 2 kids, they know I live in Santa Monica, they may even know my political affiliation, and they know who my friends are, and by knowing who my friends are, they can draw inferences that Google itself can't. And what I find interesting too is Facebook has just launched, I'm told, I haven't played with it yet, a competitor for Google Analytics. And again, you think about Google Analytics is it shows who's visiting your website, it shows the referring sites and who's ending up on your page, but it doesn't show the background of those people. So Facebook is a lot more powerful from a monetization perspective, I think.
I think it's significantly bigger. Just knowing who your friends are and kind of basically having just that little, even just a little bit of information about all of you in aggregate, right? Kind of can define what you're doing.
Are you scared at all about the privacy impact? And I don't want to just focus on Facebook and how they've. Some people believe they've duped people into opening up their information more. But if I understand correctly, Om, if I decide to engage with third-party applications, let's say it's 3 to 5 applications that I engage with, and therefore those applications, I've given them permission to know my birth date, my political views, who my wife is, my kids, my pictures, that's fine. I made that decision. But the 500 people that I'm linked to in Facebook, from what I'm told, if I'm not misunderstanding, those third-party applications can now access all of their information as well. Does that worry you?
Well, it doesn't. I think we live in a world where, a lot of our information is already out there. At least somebody like me, I live a pretty public life, so I'm not that worried. But I do get concerned when, things, start to veer into my finances and my other personal information, which is definitely not for everybody's consumption. And I think that's the risk you run with some of these the third-party applications. If somebody finds out, like, I live in San Francisco, or, I'm 43 years old, I mean, that really doesn't make much of a difference.
But if I pick up a comment coming into our chat room, JPROZ, JPROZ says, I try not to post things that I wouldn't want my mother to see, smiley face. So that's fine. Like people like JPROZ, people like Om Malik know better. But let's say that you connect to someone who doesn't know better, and that person isn't engaging with third-party apps, but you do, and suddenly those third-party apps have access to their political affiliation.
Oh, absolutely, and I think that is an issue which is not going away anytime soon. Even I have a very private network. It's not open to everyone. I keep it very quiet, and there's a reason for that. There are certain things where I'm very public, which is Twitter, and there are certain places where I'm not, which is on my Facebook network. And I don't use any third-party applications. I don't like to give away any third-party. Look, a lot of this.
But if you connect to people who do, they've got access whether you like it or not, if I understand correctly.
No, you can also prevent from other people from having access to all the information, and that is in the privacy setting. It's in the custom setting. So I go in and just say, nobody gets access to all my information. As simple as that. That's all I did. Okay. I mean, it was very clear where Facebook is going. And look, I think there is a big debate in this whole thing, and there is the assumption that the average person is stupid, that they won't understand about this privacy. Yes, people will make mistakes and accidents will happen, but eventually every person will figure it out and build the privacy they are comfortable with. I do believe that there's a whole generation of people who have grown up using Facebook. They are more savvy than you and I, Mark, and they have a new way of doing things and a new way of thinking things.
I don't worry at all about the digital natives or millennials or what you want to call them. I worry about my mom. Mm-hmm. I mean, my mom just doesn't know. She went from AOL, and I tried to tell her for years, Mom, you're not on the internet, you're on AOL. And now I like to say, Mom, you're not on the internet, you're on Facebook. I started calling it the Internet. And it's delivering so much utility. I mean, I like Facebook. I'm not against Facebook, but I worry about my mom who doesn't understand these things.
I also, I'm also, just as Om said, I'm very transparent online. But my fear, and I also have to be, I don't agree with Om about the privacy settings, because if, as you said, my mom or someone who's not a digital native, I mean, we're constantly interacting with this. But I just looked at this like a week or two ago, and I really wanted to see which apps could potentially have access to my information and to my network. And you really can't, as a digital native, you can't really figure it out. Yeah. Right? I mean, you have to really dig to kind of figure it out. My mom's not going to do that.
We don't classify it digital natives anymore, but
no. Again, I mean, what's a classification? But my mom is far away from that. As are a lot of people that I know that just aren't in the industry. Yeah. And these aren't people who are 60. These are people who are 30, 35, who just don't care. Yeah. Right. So they don't necessarily know what kind of information they're even disclosing by using Facebook.
So I want to pivot. I want to do two quick things. Number one is I want to thank another sponsor. The sponsor I'd like to thank is called PickClick, P-I-C-C-L-I-C-K, pickclick.com. We've talked about them a lot, Paul. What they allow you to do is visual search on products, particularly around eBay, Etsy, and online dating. So an example, if you're on eBay and you want to look for cars, instead of having to see all the text descriptions, you could go through eBay Motors, pickclick.com/eBay Motors, cars and trucks, and you can actually see a visual representation of all the cars and trucks and then drill down on the ones that you're interested in. If you want to do online dating, you can see, I mean, it's obviously a good use case for it, right? You know, you can at least see what pictures they're putting up there. We don't know if they're recent or not. Recipes and other things. They've been a great sponsor of the show. I think it's a really cool product. We're pretty selective with who will allow to sponsor. So I want to be sure that if you like the show, that you please check out PickClick. And if you like the product, you know, why not send out a tweet or a Facebook post and let people know. But let's talk about the deals of the week. The first one is particularly interesting to me. It's a company that I love and that I think the CEO and the founding team are phenomenal. It's a company, it's what I call every week the deal of the week, and it's called Collecta. Collecta just announced that they raised just under $5 million. The founders of the company were Jack Moffett and Patrick Mahoney, both of whom I know. And the CEO who was brought in later is Jerry Campbell, who I also know. Now, they were funded by True Ventures. True Ventures is the main investor in Collecta. And what they do is it's real-time information. So it's not just search. It's not, I think you'd see their competitors as someone like One Riot, which says, I want to go and I want to search on real-time information. These guys, instead of search, they allow you to push information, and then they filter it based on topics. So if you have WordPress posts, if you have Flickr images, if you have tweets, if you have other real-time information, you can create a widget on your blog and you'll set up the things that you want to cover. So I could say on my blog, venture capital, startups, you know, whatever, California or US or whatever, and information will be pushed. And then I can further slice and say, I only want to see images, or I only want to see tweets, or whatever. That's what Collecta does. Just raise money. Om, are you still with us?
I am. And
you obviously know Collecta well. How are they doing?
I'm actually going to not comment on anything, given that I know them too well, so I'm going to abstain if you don't mind.
No, I think abstaining is a fair point on them. They are, anyway, they've developed this widget. They also have a homepage, Collecta.com, where you can actually test out their search. They have search with push technology. So that's a round that just got done. I'm very happy to see that completed. Have you played around with Collecta? Have you seen them before?
I haven't. I was just wondering, what's the use case? So if you have it on your blog, you're going to push information that's relevant to your posts?
So first of all, let me say this. I think we are moving from a world, we had Web 1.0, which is I'm a media company and I put content up. Web 2.0, if I could broadly define it as this, is a two-way conversation, whether it's video because I have crowdsourced video, whether it's a blog where anyone can publish and other people can comment and the content becomes two-way, becomes a dialogue. What I think we're really moving to now is, I mean, it's kind of obvious now, is the stream, which is real-time information constantly pushed out there. But in the stream, you can get overloaded with information. So on the one hand, there's going to be a desire to search for real-time information, right? And that'll be picked up partly by Google, partly by One Riot or Topsy or CrowdEye, partly through Twitter itself. If you want to search Twitter, they bought a company called Surmise. But you could be in a situation where I want to have some content that's relevant on stories. Let's say on Obama. Let's say it's Obama and his BP announcement. But I want to pull in relevant information that's going to show up alongside that. And by the way, I might want to filter that and say, I want that relevant content to be people who are connected to me. And I want it to comment on Obama and BP together, and I could bring that real-time conversation in.
Okay, very cool.
So that's what they do. Let's talk about another one that Om feels more able to talk about. And I respect that you decided not to talk about that one as True Ventures an investor. Zynga just raised a zinger of around, which that was a really bad pun. They had previously raised $180 million, which valued them at $4 billion. They've just raised a new round of venture capital. Let's see if I have the amount. I'm not seeing it here, but I think it was in the $120 to $150 million range, raised by SoftBank Asia. It's 150?
Yeah, 150.
Raised by SoftBank Asia. What's with all the money going into Zynga?
Mark, just to be very clear, Zynga is the DreamWorks of the internet. Think of it that way. Okay. And they are creating products. They are creating really great, the equivalent of great movies, hit movies, right? You have to think of Frontierville, Farmville, and Mafia Wars and whatever it is as entertainment properties. They are like movies. You're in LA, you understand the movie business really well. That's what Zynga is doing. Zynga is all about entertainment. They are using technology to help you waste time. There is no other business greater than one which can help you waste time, right? As human beings, we need escapism from everything which is mundane in our life, whether it's a boring job, it's a terrible boss, or just like something else. Or you go to Farmville and you play for like 10 minutes and 20 minutes and you escape from the reality of your life. That is why Zynga is actually becoming successful. There is no learning required. The games are pretty simple. There isn't like any fancy gadgets to use. It just is there. It's just like watching television or going to the movies. And from that perspective, it's an interesting company. The investment round, I guess, the SoftBank wants to buy into the Zynga magic. And, whatever the price is, I guess they decided to pay up. I mean, they're paying up compared to DST, which, I don't know, which was the Russian investor which put money into Zynga a few months ago at another mind-boggling, valuation. So clearly, they are all basically seeing a company which has a huge upside potential.
But if I'm not mistaken, John Doerr, one of the most legendary investors in Silicon Valley with Kleiner Perkins, I think he said, because Kleiner Perkins is an investor, the fastest growing company in their portfolio in history. Am I wrong? Did he say that?
Yeah, he did say that. And, it makes perfect sense. Look at it, like just the number of people who play that, play on Zynga's games is just incredible. And I think that is why people are willing to pay for it. Like, I think, what is it, 180 million, 150 million from SoftBank? So be it. Again, another thing to notice, like this is a little subtle thing which went completely unnoticed in the the news around the funding itself, that for the longest time through most of 2000, the decade, which started with 2000, all we talked about gaming and Asia and how they were actually they were the epicenter of all MMOs and this and that. And all that is great, but look at some of the big companies. They're coming from Silicon Valley and London, right? And so there is a slight shift as the web rearranges itself. You see another wave of interesting companies emerge from Silicon Valley. So I really like Zynga, and I had to detox from Farmville. I mean, it was just killing my day. So I had to just walk away.
That's funny.
I haven't been on Farmville for almost 3 months now.
That's really funny. I have to say there's another story here, and the other story is Facebook, because Zynga and Facebook really have a symbiotic relationship. Facebook is what helped Zynga to grow so fast. And when we're in a world in which 500 million or whatever subset of those users are unique users, but let's call it 500 million users are connected and sharing and driving traffic, you get this huge nonlinear growth curve that allows Zynga to go from a non-existent company to the fastest growing company in Kleiner Perkins' portfolio ever in no time at all. And I think that ramp curve is something that's unique in the Facebook era, is it not?
Well, I think they caught that upswing perfectly. Right. I mean, 2007, I think it says here that they were founded middle of 2007. Look where they are now. And I mean,
3 years later.
Yeah, and just look at the reach. I mean, Farmville was unbelievable. The reach of that. Mafia Wars was just going gangbusters for a while. I haven't seen how Frontierville is doing, but I think that must be going even faster than Farmville did. So, again, it's a perfect example of how you can leverage Facebook as a platform.
Yep. I want to move on to a couple other deals just to make sure we get through them all this week. There was a deal funded called Beachmint. Beachmint was raised a Series A of $5 million. It was funded by NEA and Anthem. You can see the website there. It's actually in beta, so if you leave your details, you can register. It was funded by two guys I know and really respect. One is Diego Bertequin. Hopefully I'm pronouncing that right, even though he's a friend. I never say his last name. And Josh Berman. And Josh was very senior at MySpace. He's one of the founders. These guys, I mean, in a way, what the business is as I understand what they're launching, if you think about Shoe Dazzle, which we've talked about before on the show, Shoe Dazzle is like BMC Music. It's and we used to have Music of the Month Club, and you register, and then they send you music every month, and if you don't return it, you pay a service fee. So it's basically recurring revenue. And Shoe Dazzle did that with shoes. It's $40 a month, and women can order shoes to be delivered, and they don't return them for $40 a month. And what I believe Beachmint is designed to do is to focus on a lot of multi-verticals of similar subscription-type businesses. And if I think about it, that's the business eUniverse was excellent at before MySpace. So this really should suit Josh Berman well. And Diego is one of the brightest stars to be involved with Slingshot Labs, young, enthusiastic, and I know that had the ear of guys like Rupert Murdoch at one point in time.
Okay. So what's the celebrity and influencer curated recommendations part of that? Are they pulling in celebrities to give their tips?
I honestly don't know who they've pulled in. I know Shoe Dazzle was built around Kim Kardashian, and she's a shareholder there. Perhaps they're going to go with a similar angle, being an LA company. But anyway, they're just funded. Shoe Dazzle has grown like weeds, raised a ton of money. I wish Beachmint well. One that struck me as funny was TrustE was funded this week. They raised $12 million by Accel, Baseline, DAG, and Jafco, bringing their total funding to $22 million. If you don't know TrustE, it's a trusted directory where, in effect, you can put certification on your company that tells consumers that you are trustworthy with their confidential private information. And what I found interesting is that they were originally, if I'm not mistaken, funded as a nonprofit. Okay. And maybe they've pivoted and now they decided they want to make money. Any views on that one, Om?
I haven't really paid much attention to it. I have to apologize for that, but
not to worry. It's it's a company that has 82% user recognition, or that's their claim. I've certainly seen it on many sites. If you go around the web, you'll see that it's on all the big name websites, this trustee brand, and obviously they're going to try to grow that. Another deal that was done this week is called Connotate. That is software for intelligent real-time analytics across the web, taking unstructured enterprise content types. It raised $5.25 million from 406 Ventures. What they do, as I understand it, is they collect information from across the web, from 3 million websites. They bring that information together, and then they draw conclusions about what that data tells them that allow other companies, whether it's content companies or brands that want to market to people, information. So people who are using it include Reuters, Associated Press, Dow Jones, so on and so forth. And that sounds kind of like an interesting business to me.
Well, if you can figure out the unstructured data part of it, it could really be an interesting business. Depends on how they're packaging it and who their buyers are. But if it's Reuters, Associated Press, I'm sure insurance companies are going to start knocking on their doors. Could be an interesting business.
And 406 Ventures, I have to admit, I hadn't heard of. So I went and looked them up. And just one for the trivia books, apparently that is the batting average of Ted Williams. Okay. And famous U.S. baseball player, and he, as the folklore goes, would only swing at pitches that were within the part of the strike zone that he knew how to hit. So that's their representation for only investing in companies in that part of the strike zone that can be hit. I thought that was kind of clever. One other deal, and this is one I want to ask you about, Om, if it's a deal that you feel comfortable talking about, is Core Metrics. Core Metrics, of course, is an analytics company. We've talked about analytics today. That was acquired by IBM, and their main competitor, Omniture, was acquired by Adobe. And analytics is a very big category at the bottom end of the market in terms of functionality. You have, of course, Google Analytics. That's the dominant player that gives it away for free. But if you really want to know in a very detailed segmented way about your traffic, you're more likely to subscribe and pay for Core Metrics or Omniture. Any thoughts on this particular deal, Om?
I can talk in general about the whole analytics market, and I'll tell you what is going on. And the reason I can do that is actually I've just started working on my next book, and along with a good friend of mine, Pip Coburn, who's a Wall Street strategist turned investment advisor, and he has his own firm. And we are working on a book called Naked Without Data. And the two of us are basically working on the premise that the world is changing very rapidly. We are going from a world where there is too much data, and from data you need to derive information, from information you need to derive insights, and from insights you need to derive wisdom, right? That's how I run my business. That's how I think about everything else on the planet. So I look at a lot of data and try and think through things and make smart decisions based on the information I have, right? So what you're seeing right now, whether it's the Omniture acquisition or the Core Metrics acquisition, it is a lot of big companies are finally realizing that the data explosion inside and outside of the enterprises is going to continue for a near foreseeable future. So what they are doing is they're buying tools which provide information from data. Like that's exactly what Omniture does, right? You look at millions and millions of data points from a website, and then they make a little sense of saying, this is what happened, this is the page pages with the most number of page views, et cetera, et cetera. And Core Metrics does that in the enterprise context as well. I think all this is part of the big shift towards a data-driven economy, and it's only going to get bigger and bigger and bigger. And that is why I think these kind of deals, you will see more and more such deals happen. I think business analytics, business analysis, data analysis or data metrics, these are some of the words which will keep coming back to you week after week. You just keep, that just is the next big wave in my opinion.
And when is your book? When do you think that'll come out?
Well, if I get my act together, we should finish out the first version of the book by end of the summer, and then probably we are going to sell it mostly through the ebooks. They will be either through Kindle, the Apple iBooks. I don't think we can wait for the print book to come out.
And it's going to be called, you think, Naked Without Data?
It is called Naked Without Data.
And is there a fascination amongst tech geeks with Naked? I mean, I'm just thinking that, because I think Shel Israel and Robert Scoble did Naked Conversations, didn't they?
Yeah, they did. I think this comes from Pip. I mean, I really don't have anything to do with the title.
I was just kidding. Because I know Poe Bronson also did Nudist on the Late Shift, which is also a really interesting, it's a fun book to read.
I think obviously things may change over the next couple of months as I write this book. So
I was just teasing. Listen, we got to bring it to a close. There's several people I want to thank. I want to thank LegalZoom, of course, for being a new sponsor of the show. I'm a user of the product. I hope you will be too. PickClick.com, who's been a longtime sponsor of the show and sponsors several other This Week In shows. Of course, I want to thank Om Malik for dialing in from Silicon Valley. Greatly appreciated. Always nice to talk to you, Om, and hear your insights. And Paul, I want to thank you for coming straight from an airplane to tell us a little bit about the European venture capital market. And thanks, of course, to all of you for listening to the show.
Thanks for having me.
Thank you, Mark.